morning to all of you. And I welcome the media fraternity on the Union Bank's financial result for the second quarter that ended on 30th September 23. I know we have called you on a weekend on a Saturday morning. I thank you all for coming here today. We all understand the economy. The media understands the economy much better than what we are. The Indian economy is quite resilient, but there is global uncertainties. The geopolitical tensions, the external concerns are still there. We have got inflation. Inflation is still a big problem for all of us. But our bank's financial and business results continued the momentum what we showed in Q4 of last year and the current year first Q1 also, and we have got better results in terms of profit, asset quality, capital adequacy, among others. During the quarter, our bank successfully raised equity capital of 5,000 crores via the QIP on August 25, 2023. This is one of the largest equity capital raising program in the PSB space in the recent times. This demonstrates the continued faith of the investors on the bank's growth trajectory and profitability. During the quarter, domestic rating agencies have upgraded their outlook on the bank's Basel III compliant bonds, while CRISIL, ICRA and India Ratings upgraded their outlook from stable to positive. CARE upgraded the rating to AAA with stable outlook. Quite recently, the bank has undertaken one of the pioneering initiatives by launching Union Bank's first ever women's hockey team. On the inaugural day, we had a friendly match with Indian Railways. This resonates our commitment towards empowerment, inclusivity and community engagement. Let me now give you a brief background and the highlights of the bank's performance for the quarter ended September 23. The total business of the bank reached 19.85 trillion with a deposit base of 11.38 trillion and an advances size of 8.47 trillion. The total deposits grew by 9.04% and the credit grew by 9.5%. Operating profit of the bank for H1 FY24 reached 14,400 crores with a growth of almost 19.8%, and we have seen good net interest income and good non-interest income growth during the quarter and for the half year also. Net profit almost doubled YOY to 6,748 crores. We are above our guidance with regard to NIM, and we are registering to continuously grow the NIM. We are today at 3.18% in the half year. RAM portfolio also registered a good progress in all parameters of RAM, whether it be retail or MSME or agriculture. We have done well. The robust growth we have seen is in education loan, which shows a growth of almost 50%. Gold loan showed a rise of almost 56%. Gross NPA has substantially reduced by 207 bips over last year and it is at 6.38%. Net NPA is down to about 1.3%. Provision coverage ratio has an all-time improved to 92.03%, bringing down the credit cost to 0.81. The ROA also is very good at 1.07%. We had taken a guidance to maintain 1% ROA by FY25, but we were able to do it in the first quarter of FY24 itself. Our CAR has improved to 16.69%, and then we had raised the QIP as I already told you. We continue to enhance our digital capabilities by onboarding many customers on our digital platforms. Today we have got 24 million customers on the YOM platform. We firmly believe that the digital journeys will enhance further customer satisfaction and also translate into good business. We have rolled out many new initiatives like the CRC and the NPCs and the CRM Edge. Wealth management vertical has been created in the bank. We are driving market penetration, whether it in the form of sales or marketing or recovery through our subsidiary, the UBISL for business operations. We have also onboarded many external domain expertise with regard to CDO, risk officers, wealth management, and we will also be bringing in more heads of various departments so that we get external expertise. Looking ahead, we see a lot of opportunity in the bank in line with the emerging trends in India. We will remain committed for the strong balance sheet, and also will stick to whatever guidance we have given to all of us during the first quarter of the year. With this, I conclude my opening remarks, and we are now open for interaction. Thank you.
Ma'am, you have spoken about RAM advances.
RAM advances, but your large corporate and other advances seems to have some kind of slowdown actually. Yeah, can you explain that?
See, large corporate advances, majorly it will be on the whatever the base what we are giving. It is more on the pricing which we are going to generate, and then basing on that only the large corporate advances are being there. We are taking a conscious call that low yielding advances, we are not much interested on that, and we wanted to grow with a little high yield cost. Despite all these things, our large corporate advances has shown a growth, a positive growth is there. But as you told, because the market, we have to also see that what is the assets available and what is the competition going on. Basing on that, we are taking the call on that.
We are in fact having a very healthy and sustainable corporate book, I can tell you. We have grown by 3.5%, and if you see the corporate credit to the RAM, it's actually 57.43. As ED has also explained that we are morely concentrating on high yielding advances. But if you look at now, we almost have about 34,000 of undisbursed portion still on our books, and we will be able to grow the books during the current quarter and the next quarter also.
How are you looking to improve the CASA? How are you looking to improve the CASA?
No, CASA is, what we have observed is the CASA has been healthy. There is a growth in CASA, but the CASA growth we have seen in the individual CASA. So, but what we have seen is a little decline in the institutional CASA. CASA has, if you look at overall, the CASA deposit of the bank has increased by 4.45%, and the term deposit is increased by 11.59. But we have seen muted growth, or you can say negative growth in CASA on the institutional side. So, but the bank has taken lot many different strategies and methods to increase the CASA numbers. Like we have a separate vertical, we have come out with new different products for CASA penetration, and we have used the digital tools like the video KYC. We have put in relationship officers across our zones and ROs to see that the CASA numbers are increasing.
Plans to increase the rate on SA?
Right now, we don't have that thought process to increase the rate of interest. We will take, suitable, interest increase at the right time.
What has been your treasury profits, ma'am, during the quarter? Treasury profits during the quarter?
Treasury profit is 681 crores for this quarter,
Compared to?
compared to 775 last quarter, 473 year-on-year basis, around 50% growth on year-on-year basis.
Sequentially, it has sort of fallen, right? Sequentially, it has slowed down?
Yeah, because interest rates have gone up drastically.
Right, right.
So that is the reason the stress is there in the interest rate as well as inflation. So treasury has to perform.
Thank you.
Ma'am, RBI has increased the threshold for taking non-callable deposits from 15 lakhs to 1 crore actually. So what kind of impact will this have on banks? I generally wanted to know your views.
See, it is, each bank is having its own policy of non-callable and callable. So it's not going to much, impact. In fact, the bank is also now not into taking huge bulk deposits. So if you look at last quarter of Q2, the bank has not gone into taking bulk deposits. But I'm sure that this is not going to make a major impact on the bank. We have got considerable liquidity in the bank, and only if my advances grow to a great extent will I be taking deposits. But as I told you in the very beginning, I am concentrating more on CASA and on retail term deposit to bridge whatever gap I have in my ALM mismatch or in my credit.
Hello ma'am, this is Mimansa from DQ Prime. My question is on the target for till the end of this year. Where do you see the net interest margin and credit and advances and deposits growth target?
I had given a guidance in the beginning itself with regard to the advances. We said we will grow by 10 to 12%, and we are today at 9.5%. That's the growth that we have shown. Deposits, we said we will be at 8 to 10%, and we have done fairly well at 9.04%. NIM, we said it should be 2-3%, and we have considerably increased our NIM with 3.14 was last quarter. This quarter we are at 3.18%. We are sure that we will be able to protect our NIM with 3%. GNPA was, we said about less than 6%. Today we are at 6.38. We have substantially brought it down by almost 207 bps. Slippages, that was the guidance given was 12,000. We have done 5,404. That was the slippage for the H1. Gross recovery also we had given a guidance of 16,000 crores, and we have close to about 6,900 crores for H1. So whatever guidance the banks had given to us, we have been able to achieve those guidance, except for of course the advances, and I still have 2 more quarters to go, and I'm sure that I will be achieving the guidance of whatever we have given.
Hi ma'am, Kabir here from Informist. Just wanted to know the share of unsecured loans in your total portfolio.
My unsecured loan portfolio of the total is just about 11,000 crores. Consisting, if I look at the portfolio of 8.47 lakh crore of advances, it's just about 11,000. It's a minuscule one. It is basically of my personal loans which I have given to my salaried employees, and also to a little extent towards credit card use. So my almost like 73% of my personal loans is to the salaried class.
Right ma'am, and just one more question on deposits, it's not on CASA but on term deposits also. Do you see rates going up in the system, not specifically to your bank, because we can see that deposits are lagging quite behind advances now?
Yeah, Reserve Bank of India has not raised the rate of interest, so it has not gone up. And whatever we have priced in September 22, that is the repricing that had happened in the last 2 quarters. I don't see any repricing happening, except that if the Reserve Bank of India again raises the rate of interest, only then it's a concern. But I don't find any need for the bank to raise the rate of interest right now. But as I told in the beginning itself, it all depends on the liquidity position within the bank, the way my credit growth is going to happen, the ALM mismatches, if at all it comes in, then only then I will be able to raise the rate of interest to take the deposit.
So when the entire repricing has happened?
It has happened to a great extent, it has happened.
Deposits.
Yeah, deposits it has happened.
Thank you.
September 22 is when I raised the rate of interest, so I have been able to reprice all of it.
Thank you.
Good morning, ma'am. This is Abhijit Leni from Business Standard. This is about the recoveries and the sale of any NPAs to the ARCs, splitting one to NARCL and another other ARCs. So, since you have quite a strict target of bringing down the recoveries or the sale, what is really the scenario?
I can tell you that during the quarter we did about. I can just give you a brief on all the various recovery methodology the bankers use. We did the ODS, that is a settlement, and through Sarfasi we have done quite a few of them. ARC sale we have done about 4 of them we have done for this September Q2. and about 615 crores was the total amount, and 200 crores was the recovery in that. Major areas of recovery was through the OTS, where about 75,000 accounts were settled. SARFAESI we have done about 2,800 accounts we have done. NARCL we have done about 2 accounts, and the DRT settlement was to the extent of about 460 numbers. So NCLT was 1 account. So this is the various methodology that the bank can utilize for reduction of NPAs through the various channels.
In terms of OTS amount recovered, how much it would be?
Amount, the total ledger balance, if you can say, was about 830, and we were able to recover close to 100 crores.
In the balance part, what is really the targets? So
we,
OTS and
usually we give them a 90 days time for, settlement of the total amount. So it may be happening during this quarter, sometime in the next quarter, as and when the OTS amount is due, that will come in.
I'm done with my query.
Thank you.
Ma'am, my question is, given the current festive season, what is the kind of demand for retail loans that you are seeing specifically to this festive period? And another related question is there a kind of is this kind of a demand impacting the liquidity in terms of leakages of currency in the system, in circulation? Through currency.
Okay, I'll answer the first question, of course. The retail demand will be there. We have seen a robust growth in vehicle loans in the first quarter, of course. 26% was the growth in our vehicle loan. And going forward, we will see good growth in my vehicle loan portfolio, and also in the education loan and the housing portfolio. These are the 3 things that I am looking at the growth. With regard to the leakage of liquidity that you are talking about, liquidity, we have got sufficient liquidity with the bank, and I don't foresee any impact on liquidity, and I will be able to take care of the advances growth for the time, for this quarter at least, with the liquidity that the bank has got.
Yeah, hi, Sachin from Financial Express this side. Madam, on your advances, you have slightly missed on your guidance in the first half. So, what is your guidance for the second half, and do you think you will be able to make up for the loss of ground in this, and what are the reasons you are so hopeful?
See, as we told, advances, we will be able to, we are already told, we are already having around 30 to 34,000 crores which have been sanctioned and which are in the disbursement stage, which are in the pipeline. We are already having it. It will be done when the project is going up. Going up. These loans will be disbursed. So, absolutely no problem. We are sticking to the guidance, and we will be meeting we will be exceeding the guidance also. Because now the credit consumption season has now started. Just now began. This third quarter and fourth quarter will be always the busy season.
And madam, also about your asset quality, although you have improved significantly in the first half, but it is still quite high given your peers. And so in terms of asset quality, can you give us some plan for your next couple of quarters? How do you plan to bring your asset quality, or how do you plan to improve it?
As I told you in the very beginning, that we had a guidance of reducing the NPAs to below 6%, the GNP of course to 6%. We are at 6.38, and we have taken various methods now. For example, we have come out with a very good OTS scheme for the Samadhan scheme, and we will be able to do substantial numbers in that. Plus, we also will be looking at, there are restructured accounts with regard to agriculture. That because of various reasons, agriculture restructuring has happened, and so we have also come out with a scheme to reduce the repeated restructuring accounts in agriculture also. So we have got strategies, we have got the know-how as to how to reduce it, and in the next quarter you will see substantial decrease. I am talking about this quarter itself. You will see a substantial decrease in our GNPA numbers. And I think our new ED, Mr. Rudra, will be able to substantiate further on this one.
So whatever the target we have kept for the current financial year is a 16,000 crore of recovery. Out of that, approximately 7,000 crore already we have done. So So this additional 9,000 crore of recovery will be affected in the second half of the current financial year. In addition to that, one good thing which is happening in the asset quality side, our slippages has come down drastically over a period of time. Now we are approximately having 2,800 crore of quarterly slippages. With these slippages and recovery which we are targeting, will be definitely be able to meet what the industry level is there. Definitely will be able to meet in the current financial year. And some of the strategy for recovery which you have already, as Madam was telling about the agriculture loan, as you are well aware of that, key Maharashtra and southern part of the country had lot of agriculture issues, especially related to the climatic condition of the country. So to ease out the problem of the farmer as well as the recovery of the bank has come out with a beautiful policy which we call as a repeated restructuring. The long back the loan was given but still outstanding. So there we are going for the aggressively and giving some OTS proposal to customer, and the response of the people is very good. We may be the pioneer in that in the entire banking industry which we are doing. So definitely this quarter our asset quality will improve substantially.
Madam, your plan about capital raising, because 10,000 was your plan, but I think 5,000 has already been.
We have already raised.
Yeah, so what's the plan?
8,000 crores is what I have to get out of the equity front, and the remaining was to be coming from the Tier 1 and Tier 2 bonds. So out of that I have already raised 5,000 crores, and the remaining 2,000 crores is what I need to raise the equity front. We hope to raise it during the year. By the end of this calendar year, we will be able to raise it.
Thank you.
Ma'am, this quarter we've seen 6,000 crores of write-off. What is this due to?
See, these are accounts which have been fully provided actually. That is how we have taken the write-off. This is a market, this is a industry practice. Last year we did about 18,000 crores of write-off. So in this quarter we have done about 6,000 crores. And so going forward also we will be writing off certain accounts which has been fully provided in our books.
So these are agri
It is in various parameters, various like MSME or agriculture or the large corporate, any kind of a thing we will be able to run.
These are
Actually,
technically,
yeah.
these are basically the technically written off. These are not written off completely from the books of the bank. From primary balance sheet it is written off, but it is still continued at a branch.
Not only that, recovery process will be going on in these accounts. We will be recovering from these accounts also, only for the balance sheet purpose we are just writing up. And to add to the cooperative, this is one of the reasons, because around this 6,000 crores has been written off. Otherwise our advances would have been up by another 1%, which we will be meeting the guidance.
Any provisions made against for wage provision?
We make the provisions, wage revision at 15% we have been making. Every month we do about 110 crores of provisions for salary increase.
And this 34,000 crores of undisbursed loans that you have, from which sectors are these loans that you say?
These are in all sectors that we have, in HAM, infrastructure, power, steel, many industries we have.
And you were mentioning about having enough liquidity actually with the bank, So how much of excess SLR you have? And
We've got close to about 50 to 55,000 crores of excess XLR.
You spoke about the balance 2,000 crore rupees end of the calendar, that's end of by December.
Yeah, we hope to raise it by December.
Another round of QIP or what is the,
It's a QIP only that we will be raising.
and 81 and 82?
We will be raising it, we have not decided on, because, assignment, because these will be by replacement only.
How much is maturing?
2,100.
2,100.
is the pass-through of repo rate complete in terms of MCLR? Is it complete?
In EBLR it is complete, in MCLR it is not actually complete. There was an increase of 250 bips. We have done about 130 bips the increase we have.
Okay. So how much more you could go actually? No? Yeah.
See, MCLR repricing that you are talking about, I have a book of 50% of my book is in the MCLR, and that's about 2.3 lakh crore. I have done most of them. 1.2 is yet to be repriced. So that will be done during the current quarter and the next quarter also.
Further to supplement what Madam said, see MCLR, the entire transmission of repo will not happen. If you go back to when the MCLR was only there, at that time that was the concern why the MCLR when the rate is going down, MCLR is that reduction is not transmitted through the MCLR. Because basic concept of MCLR itself is saying about the marginal cost. So it will not happen in future also to transmit entire 2.5% to MCLR, which has been done in the EBLR.
So, Madam, what is the mix of your floating and fixed rate loans now?
91 is floating and 9%.
So like it's like fixed is almost being phased out, right?
Yeah.
Incrementally all your loans are.
Now going forward, I think everything will be floating. That's
Floating,
what
yes,
is-
yeah. But what I was saying is asking you within floating, like now you'll have to also link it to EBLR, all your loans, right?
No, that's what Madam was telling, 50%, around 50% still under MCLR.
Oh, 50%.
40% EBLR and 1%
Okay.
other age.
About EBLR and MCLR. MCLR is about 50% of my portfolio. The remaining is EBLR and TBLR.
Treasury bill. That means we just short term rates.
Yeah,
Yes, that is short term, 90 to 180 days.
Madam, what is the kind of lag that, just for my understanding, it said that transmission is faster through EBLR, but it also, I think for you, the asset liability management also plays a role here. What is the kind of lag do you see in transmission for both?
Ma'am, but
cost and
EBLR,
deposit?
we don't see any lag at all. It is the immediate transmission actually, yeah.
How much of accounts or business is secured through your digital means now, digital channels?
Didn't get your
How much of
question.
how much of your accounts or business is now secured through the digital channels?
We need to bear in our presentation. One minute, I just don't remember the details. Like if you look at this, in fixed deposit, there was a YOY growth of almost 50%, 58%, all through digital this one. And CBDC retail users, we have increased, that it's a new type of currency that the RBI has also thought about. So we have onboarded almost 1.35 lakh customers on that. UPI volumes, we are the third largest in the country if you look at this. MSME renewal, that is up to 10 lakhs, we do the MSME renewal. So it's almost 91% of the renewals happen through the digital channel. Then retail accounts renewal, we say up to 50 lakhs has to be done through the digital. So almost 85% of that is being done on the digital channel.
These are loan
And
accounts. These are loan accounts.
these are loan accounts. We have done lot many things on the on the asset side, on the liability side, not much except for the fixed deposit conversion through the digital channel. That is what we have seen. And the other for the deposit sides and the liability side, we are coming out with. We have already come out with new products, but then that will be pushed during this quarter, the next quarter also.
Ma'am, once you raise this 2,000 crores by a QIP, how much will the government stake come down to?
It will come below 75%. Now it is at 76.98 is what it is. So if I take another 2,000, it will come below 75,000. That's a requirement of SEBI.
I have a question on CBDC transactions. How much of the target is 1 million transactions per day? So, if you could give a sense on how many transactions are happening through CBDC on a daily basis?
We have actually set out and met the RBI target which was set
Why?
up.
I think this is not working.
Hello. Yeah. We have already launched retail CBDC and in the process of launching wholesale CBDC also. As far as the RBI target, earlier target, this is the revised one which they have come up with. Now that the growth is happening, we have actually exceeded the targets which were given by RBI both in terms of number of users onboarded and in terms of number of transactions which was given earlier. Now, of course, they have raised the targets to a level where it should become a transaction which will become comparable to earlier days of RBS. We are quite hopeful that after the launch of wholesale CBDC and the drive which we are taking, we will be able to meet those transactions.
What is the current transaction for?
At this point of time, on a monthly basis, we are doing close to 40,000 transactions. But that is because of the acceptance influence. Now that the QR code interoperability is also coming in CBDC, that is substantially going to take off. Because earlier, otherwise, when you were provisioning for CBDC, there was an acceptance infrastructure which was in question. Now that the QR code has been implemented and the CBDC will become interoperable both with UPI and the QR code, the number of transactions should increase going forward.
Have you implemented UPI on
Credit on UPI,
Yeah, it is there.
Yes.
it has been, what is the usage?
Users are not that heavy, but yes, we are live since inception. And when the RBI is permitted, we are also in the same line, we are on live with the
And what is the expected provisioning on this, the ECL provisioning requirement, have you been able to?
So if you look at ECL provisioning, there are three components: stage 1, stage 2 and stage 3 assets. So stage 3 assets are adequately provided because you can see our provisioning coverage is 92%, more than 92 in fact. So that partially set up the requirement which will come for stage 2 assets. So stage 2, because we need to provide based on future outlook of the loan account, and this is based on historical default rate which we are taking for 7 years. We have been calculating this gap. Current provision is, as per IRAC norm, is about 44,000 crore in our portfolio, and gap earlier which was 12,000 crore has come down to 8,000 crore. It is less than 8,000 crore, so it has substantially reduced by more than 30% this gap. And there are two primary reasons for reduction in this number. One is probability of default number is coming down over a period of time. Because this is 7-year data. And second, we are providing higher amount under stage 3. So this this gap will further come down, and we are adequately prepared to make provision based on future profitability.
what is the gap now?
8,000 crore.
8,000.
Yeah.
This write back on investments you had in the last quarter, what is this write back on account of non-performing investments? Is there any kind of challenge?
Yeah. What is that?
Right back on
Investment.
Yes.
Yeah, which has been converted into standard assets.
Yeah.
So we have to get a right back on those. Whatever provision made will be returned back.
Any kind of particular account, chunky account that has come in actually?
No, it is on account of upgradation of those accounts. No?
Okay.
Like whatever the CDR restructured investments, that has converted into standard assets. So whatever provision held on those accounts, which has been, which is Jyoti Both you restructure one small amount. 101 crore. 101 crore.
Which is this account?
There are small and tiny accounts.
I'll tell you, we'll tell you offline on that.
Ma'am, on the equity capital, because you've raised such a huge amount, what about the cost of capital? I mean, you are looking at growing only 10 to 12%. So isn't there a cost of carry? Is it the cost of capital would go up, and wouldn't that sort of affect your ROE?
Now this this capital were raised for two purposes, of course. One for SEBI requirements, and the second, of course, was for group requirements also. You have seen that now the CAR is also improved to 16.69%. So the bank will be able to take more growth into the so that was a requirement. And first 2 quarters, the advances growth was muted, as we have already told you. But we would like to say that substantial increase in the credit portfolio will be there in this quarter and the next quarter. Now that the festive seasons have started, and as also it is explained, the Q3 and the Q4 are the quarters where really the growth happens in the economy. So we are also looking at a good growth, and we not only that we have given guidance of 10 to 12%, and we will be able to substantially move ahead of those numbers.
Given that most of the banks across have now 15% and above capital adequacy, is there a goal you are looking at that you will maintain on an ongoing basis? Any floor that you will maintain so that you have enough buffers to either absorb unexpected shocks or even to increase the pace of credit mobilization?
No, now this one is about 9% is the regulatory capital. Usually what all of us say is, it will maintain, but all of us take 12% to 13% is what the CAR. We take more than the regulatory capital. So of course, we will maintain it above that 12% is what we feel. Thank you all of you. Thank you for coming.